Welcome everybody to the MENA roundtable discussion. And we've got quite an esteemed panel today, which I'll introduce shortly. And for those watching, both investors and founders and industry participants at the 2021 event, welcome. And we hope that there are some insights that you derive from this roundtable that you can take to your practices after this. So just to go around the table, we'll start with a few introductions. Dr. Ruchi Dana, a venture partner at FundRx. Welcome, Ruchi. We've also got Madhu Avalur, a serial entrepreneur, professional investor, and global advisor. We have Ethy Levy, a fund manager at Kinneret Impact Ventures, and Amin Matni, head of incubation programs at Qatar Business Incubation Center. Welcome, everyone.
Thank you.
So to kickstart, we'll start with a very generic question that I think a lot of people have on their mind at the moment, and that's centered around the pandemic. More specifically, I'm interested in knowing, and I think a lot of the audience would be interested in knowing how this has affected the investment landscape when it comes to startups and venture capital, private equity, or even managed investments in general. So to start with, Etty, I'd love for your opinion and your perspective on this from your region and what you've seen to date.
Sure. Well, thank you. It's a pleasure to be here on this panel. So in Israel, and I think that we've seen that in most of the world, at the beginning of the pandemic, there was kind of a standstill. Everything just stopped in the investment ecosystem because I think we didn't know really how long it will take and how it will develop. So there were a couple of months where we've seen a regression in terms of investment in startups. And then I think that most of the funds mainly allocated the money to maintain their own portfolio. They didn't take risk in investing in new startups and new ventures. And I think that after about 4 months, things kind of went back to normal. So investors are investors. They're curious. They want to see new ventures. They like risk, so they want to try and support new startups and and entrepreneurs. And I think that in Israel, at least after about 4 months, we saw again investment in early stage startups. And we saw lots of very interesting exit as well in the past year. And I think that the report on 2020 was on the first quarter of 2021. On the first few months of 2021 was just released, and we've seen really good results. And 2020 wasn't affected at the end. When we look at the end of the year, it was a good year. And I think that there was just this kind of period where 3 or 4 months where it was very challenging for early stage startup to raise. And now what we see is that investment in early stage are a bit bigger than before, because investor, they want to make sure that those startups, they have enough funding for a little bit longer period because of COVID-19. But on the other end, they're much more hands-on with the startup. So making sure that they achieve their milestone and making sure that they do everything that they can to cope with COVID-19. And many of the startup obviously, moved or added services online, even if it wasn't their original plan or their original line of activity. So those little shifts, but in overall, I think that we can say that here in Israel, we're pretty much back to normal.
Yeah. Well, I think that's a really good point. You've obviously got people who these startups need to survive the winter at the end of the day, and the VCs have, as it seems, stepped in to allow that. And you've said that they've invested for a runway that's longer than that typical 6 to 12 months, I assume. So that's some interesting points. Amin, have you seen the same in your region? You've got an incubation program that you deal with. So there's a lot of fragility with these startups, right? And I assume that it may have been very scary for them, and you would have had to deal with deal with that personally. So what have you seen in your region? Is it similar to what Eddie's has been seeing so far?
Yeah, definitely. From our end, the business incubator, we focus on pre-seed stage. So at the tip of the funnel, we've seen with the existing portfolio relative impact on those who basically, whether they're operating in the education sector where they didn't have transformative tools and adaptive tools to the COVID situation. So these are, severely impacted, and they had to do major pivots. And hence we supported them in these times. On the other hand, we've seen amazing energy with the new cohorts who adapted and created or fueled the digital transformation that was required to sustain our living, whether through education or through commuting, communicating, learning, or even the fintechs. So in the bank, we have 5 incubators. One of them is Cubic. So we have the fintech, sports tech, which is fueling for 2022 World Cup. And we ventured into the fashion incubator also. Cubic is a mixed incubator where we are sector agnostic also, with double portfolio, the SME portfolio for industrial manufacturing and the startup scale-up portfolio. So with that, we've seen beautiful energy and even disruptive technologies that we believe they're amazingly scalable. We're very positive for the closure of 2020, and we're like fully focused on supporting them. Our mandate is 1 year of incubation with a pre-seed injection, and then we help them to also reach seed, and also we can renew our incubation services for another year. On the other hand, that we have the partnership with a telco, where we host, they inject in local startups, and also they spare 2 tickets for overseas startups to land in the country. So this is an open ticket for startups who wish to land here, that we're always open. We landed 2 startups in 2020, and we're looking to land 2 startups with good synergies with a telco.
Oh, excellent. So it's still truly active. So it's excellent to hear that. And I'll dig deeper into some of those other points a bit later. Before I get to you, Madhu, from an entrepreneurial perspective, just one more from an investor perspective. Dr. Ruchi, Dana, if you don't mind giving us your perspective to date, what you've seen the changes and if they resemble what we've heard so far.
Yeah, I think just adding on to Ethy's points, she really nailed down exactly what was happening here in the Middle East in the Dubai market as well. One of the new changes that happened was the relationship with Israel just opened up. So that was a huge change for this region. And then we are seeing a number of startups and a number of VCs actually coming into the region. And so that's actually causing a lot of action, and a lot of these VCs would actually bring their portfolio companies in the region and maybe expand to other parts of the Middle East. So Dubai is the central hub for that. So that's exciting. And in the Middle East, we recently saw a few exits, like Careem got bought by Uber, Souk got bought by Amazon. So there was just some sort of excitement happening in the space, but then COVID hit. But I think this relationship with Israel has actually reignited the flame that was there within the people here, and the startup ecosystem is really booming right now. The governments are pumping in a lot of money as well. They have a matching program for VC funds and for startups. So that's again helping out the startups in a big way. Also, if you look at the family businesses that were traditionally investing into real estate and other asset classes, they are now starting to look at startups and even VCs from an LP standpoint. So that's exciting. And even the patriarchs of the family are now, because all you read about in the newspaper and everything is startups and SPACs and exits, and also everybody's really excited. So I think this whole region will see a lot of shift, especially for startups and entrepreneurs. And even the government has relaxed some of the policies, some of the visa restrictions have been relaxed. There's also a remote visa available now. So people from who are actually working in other countries might just land up in Dubai to work remotely. So that's also a provision. So I think that again would be a good
framework's really being built there at the moment. So just on that point, because I think it's a great point, what would be your advice to people who want to take advantage of that framework, looking to start a venture and from the ground up in your region? What would be your first steps out of interest?
Yeah, I think it would be a great beginning if people would like to like register a company here, especially in Abu Dhabi, because they have a matching program for fundraising as well, and that actually gives you access and an entry point to other regions in the Middle East. So I think like a starting point would be just to register a company and see, maybe get incubated in one of the government incubators, and then like that again opens up a lot of doors. And the regulations here are really flexible when it comes to startups and when it comes to new areas, and the government is really supportive. And they are actively promoting like these initiatives, and they would love for like international startups to come in and incubate here.
Excellent. Thank you for that. Madhu, I'm very interested in your perspective here, because you're on both ends of the spectrum in terms of investor and an entrepreneur. I assume that you're still quite active on the entrepreneurial space as well. And so I'd love to hear how you've dealt with this so far. And then let's talk about the professional investor side of things too.
Sure. I think I get a very unique view because I can get to flip hats quite fast. So I'm still an entrepreneur, and I've been investing, and I sit on the boards of companies as well. So what I've seen, like the first phase of, I think from March to June or so globally, everyone was just in the survival mode, right? They were just trying to understand what was going on and try to kind of hunker down and see what's happening. And then this, from June, July onwards, people start to kind of assess what has been the strengths of each company's individuals, and I think things started to slowly kind of, at least the light at the end of the tunnel, if we will, started to show up, and people started to assess where they are more from a pragmatic perspective. And then the fear factor was kind of slightly behind. And I think from assessing, then at least these green shoots of thriving started to come in. And I think fast forwarding to February of this year, some of the companies are already growing, and whichever company has digital as a kind of a integral layer in their business model, in their kind of a portfolio, whether from investor perspective or from a company's perspective, digital was part and parcel of their core. They were actually grown much faster than they realized. By the time they understood they were growing fast enough, it took them by surprise, right? Because they had to hire more people, because this was digital transformation, like the 1990s when internet started to really scale. You are local, but you are able to reach the global markets without really a major kind of a realignment, if you will. So I think that was a bit of an element of surprise for some of the companies, because they were just so hunkered down. They didn't realize that they were growing much, much faster than pre-COVID, at least some of the companies. So then they had to really assess and say that how do you bring in the resources in terms of hiring the people, bringing more capital to the table, or making sure that providing the support for the vendors and companies. So I think overall, I think as people talked about, right, is it the next normal, new normal? Effectively, this is, here we are. It is a changed world. It's unprecedented times. I think slowly maybe it's the beginning of the end of the unprecedented times, but unprecedented times got unprecedented opportunity as well. And some of the companies have really, really capitalized on that. And you've seen a kind of a wave of exits, wave of big rounds of capital infusion. Even new companies are raising unbelievable amounts of money straight from the words that go. So I think it's a changed, it's a paradigm shift, right? And interestingly, I think the entire world was going at the same pace, right? Because I think in the last probably 2-3 decades, no one has seen anything like this, because everyone is affected equally. Everyone was in it together, basically individually, collectively, and severally also. So I think that was a kind of a very different kind of a experience to go through. Challenging times, yes, but I think we are looking forward to kind of a growth mode now again.
Yeah, I think I think you bring up a great point about people not realizing that the potential they had in a digital pivot as well, and that's really interesting. Right. It brings me on to my next question to you guys is, have you in those moments where you see these companies really performing, have you changed your focus in terms of what sort of sectors you're looking at, and have you been surprised by any specific sectors and how they've adapted so far and pivoted, and has that changed the way you have been scouting for businesses? So let's start again back with you, Ethy. in terms of sectors, all right, if we get a bit more specific here, what's really got you interested at the moment, and has that changed recently?
So my focus has always been in the impact sector, and more specifically agri and food. And I think that those areas of agri-tech, food technologies, but also sustainability, they're even more relevant at the moment. And we actually see a shift of some of the more traditional investors that would invest in traditional tech moving into those sectors because they understand the importance and the need, especially in time of crisis. We've seen much more focus on personal health and personal nutrition, and this has given a major boost to this industry. So for me, there hasn't been a change in the sectors, but definitely when you look at companies and early stage startups, you look at different things as an investor. You need to make sure that they can manage and achieve their milestone even at the time of crisis when they cannot travel. So they need to have the necessary tools to be able to interact globally with buyers and with partners in the development of their idea, even without traveling. So interpersonal skills is critical at the moment. And this ability to adapt quickly. So we're looking at additional traits in investors, in founders that wouldn't have been on the top priority list before.
Do you have any example? I'm interested in a point you bring up there around the interpersonal skills, and it'll be a question to everyone later. But what about have you witnessed any stories or with founders in your portfolio companies, or even ones that you haven't been directly in contact with, that has shown their character in this, and what have they demonstrated, and how they overcome the barriers that have been established recently? Has that been prevalent amongst your portfolio companies at all?
Yeah, so I'll continue in the same line, but yes, I think that when we look at teams today, we want to see this ability to interact quickly and create this personal contact even via a screen and Zoom. And it's different from, an entrepreneur traveling and meeting in person and demonstrating his product. It's very challenging to demonstrate a product via Zoom. So you need to be much more passionate about what you do, because passion, I think, goes through the screen. And you need to be really, really, believe in your product, believe in your idea. And it's a challenge for the entrepreneurs at the moment to be able to transmit all of that through the screen. But obviously, the side of the technology and the technology that is, that you can trial even without traveling. So, some of the technologies are relevant for other geographies, not necessarily for Israel. How do you do that? Before that, you would find a place to trial, and you'll be able to travel, and now you don't have this ability. So how do you manage this period of time? But most of the entrepreneurs have been able to adapt to those challenges, and we've seen some really exciting startup starting their journey and progressing nicely in this period of time.
And Amin, I'd love to go to you now. I'm interested to know if you've seen any, we'll talk about sectors in a second, but have you seen any displays of characters in the founders that you deal with that has really gotten them through these last 12 months? Because I understand, I'm pretty certain that the people watching this video, once it's streamed, will want to know from the investor's perspective what you guys are looking for in terms of character beyond business, because I understand that's a very important factor in your investment decision. So what if you don't have any specific examples, what are you looking for from a character standpoint with the founders you deal with?
The key thing is about the team and is about the people, because if you have talent and skills and the grit that you need, because if you speak to a founder and co-founder within the conversation, if their eyes don't blink when they're talking, and you see this amazing energy, then they're gonna die out in a long marathon of 5, 6, 7 years until they see the light of scalability. So that passion and match it with the core skills. This is the beauty. This is the beauty that you want in the beginning. And if they have a deeper listening capabilities and coachability, then this is what you need. Because if you listen what the market needs and you adapt and you go in quick sprints, then you can be responsive and adaptive. And this is what the game is about. It's not about implementing what you have in mind. Is basically being responsive to what the market needs. And if you have those acuities, then thumbs up. And we've seen this happening on both ends. Those who want to project what they had as a business model rather than shape the business model what the market needs. And we saw both, one struggling and dying out, and one beautifully shining. And this is part of the risk that they take within their ventures. And of course, it's the learning curve, right? It's a learning curve.
That's it. I really like how you've delineated that. And for anyone going to the Qatar Incubation Center, don't blink or Amin won't look at you. But going forward, and I love that. I think it's really true. And I think you give great points there around the importance to be adaptive. And there's no better time to demonstrate that than now. Ruchi, from your perspective, characteristics of a founder, do you have any specific stories, or do you have any specific preferences?
Yeah, I have a specific story because it happened with one of our portfolio companies. We invest mainly into the healthcare sector. So when COVID hit, there was a lot of disruption happening in the healthcare sector. A lot of people were entering into PPE supplies and all. So this particular company is doing genetic testing and microbiome testing. So even though COVID testing was something that doesn't really fall into their domain, but they went out of the way to create a new revenue stream, and that was really exciting. And they supplied to different countries as well, not just their own country, but they exported those COVID kits, the immediate rapid COVID testing kits. They exported it to various countries, and they got it branded in their own name. So that actually shows the resilience of the founders and how willing they are, because logistics was so disrupted. They were not able to ship the normal kits, but they were definitely able to supply in bulk the COVID testing kits, because that was the need of the hour. So they made a lot of revenue on that, and that was something that was really commendable, because otherwise most of our portfolio companies at that point in time, when COVID had just come around, they were just they didn't even know what to do about it. But this particular company just stood out of the way and made a huge revenue on those kits.
That's a great story. And I'm sure there's many stories like that out there as well, of this incredible resilience and adaptive powers, which is just, obviously been rewarded monetarily in this case as well. Madhu, I'm interested to know from you, how have you seen yourself change in these times? Let's go back to the entrepreneurial hat here. Have you had to demonstrate certain parts of your character to get through the last 12 months? And if so, what can you pass on to other founders?
Sure. I think, as I say, right, passion and perseverance are the two P's, which is very, very essential to be an entrepreneur. And entrepreneurship is always a marathon. It's not a sprint. But not many people understand before they realize what they signed up for. But I think, fortunately for me, I have been an entrepreneur for the last 25 years. So I've been traveled the road less traveled, started my first company in Israel, lived there for some time before I moved to Costa Rica, and then I lived in Singapore, and then last 3 years I've been based out of Dubai. So I think along with the passion, perseverance, what I found, what makes the difference, ultimately companies tap into the founders and management teams and investors and advisors network. So we have actually articulated, I've been subscribing the 3 capitals, like what every entrepreneur requires: human capital, financial capital, social capital. What I talk about social capital is a level 5 network. Level 1 is acquaintance. Level 2, alumni, whether studying or you're working together with someone. Level 3 is you have done a transaction with the alumni. Level 4, you have been working with them for the last 10 to 20 years, and level 5, 20 to 30 years. So whoever can tap into the level 4, level 5 network, the trust is inbuilt. Like in the financial world, trust is the coin in the network. Ultimately, whether we like it or not, companies effectively become cartels. That's a fact of life, right? Cartel in some contexts may be seen as a kind of a bad word, but Unfortunately, it becomes, and whoever can tap into that network power, the founding team, their own network power, and then they tap into the investors network and advisors network, right? That's a winner. Every time it's a winner. So that's what we have seen, and we have been, and during the COVID time, what we focused was everyone understands this intuitively, but how do you make sure that what is your, at a fundamental level, what is your business model? Are you in a commodity business in terms of scale is required, or are you in a diamond business, what I call? Then quality and what you sell is how many, is it a quantity business or a quality business, right? So those fundamental questions people should focus on. And I think a lot of the entrepreneurs quickly realized survival, right? In the survival, some people, like it's a spring, right? You put pressure, it compresses, but when it springs back, you have more energy and you're able to capitalize on the opportunity. So that's what we have done ourselves as an entrepreneur. And your ability to scale actually kicks in. Unfortunately, I've seen 3 scales and myself scaled, and last 2-3 quarters as a company, we have again put ourselves in a format of scale, and we got some of the biggest networks globally to the table. I call it the Avengers team, global Avengers team to play. So that's, I think, passion and perseverance. These are the 2 very, very integral part for success.
Excellent. Thank you very much. And I hadn't heard of that. Those levels of social capital, was it? So level 1 to 5. Very interesting. Ethy, I've got a question more specific to impact investing. I want to know what the perception of the market is at the moment, you know, amongst LPs and private investors and, yeah, I mean, professional investors in general. And I'll do this again with the other panelists too in their respective areas within venture capital. But with impact investing, what sentiment, I hear it all the time now. We deal with obviously we deal with founders all the time and investors, and it's become a very, very common term. And there's been a lot of interest, you know, accumulated over the last 2 years. So I see it staying here for the long run. What are you perceiving?
Yeah, I think that, you know, impact investing has been around for a long time. I think Australia is one of the leading countries in that space. And I lived in Australia for 5 years, so I was very involved in that space. In Israel, it's been around for a while, but not, you know, not with the same semantics as in other countries. So I think that today many use the term impact as a buzzword, as a marketing tool, but there's now a consolidation around the measurement of the impact, which is critical if you call yourself an impact either investor or entrepreneur. So we see more and more kind of standardization around the impact measurement, which is critical. In our case, with Kinneret Impact Ventures, we are looking at achieving a regional impact. It's a very different kind of fund because we're looking to create a regional impact. So we've focused on the north of Israel. So if you look at Israel as a startup nation, in fact, it's more kind of a city nation. Most of the startup, most of the money goes into Tel Aviv and the suburbs, and other area of the country doesn't benefit that much from the startup nation ecosystem. So we are trying to shift that. And COVID-19 was very beneficial for us because many entrepreneurs, they left the big cities, they went back to the area where they grew. And we see more and more entrepreneurs in regional areas, and we want to keep them there. So that's why we're bringing the money to this region. We want to keep the entrepreneur in the region that we focus on, which is the north of Israel, and create high-paying jobs there. So when we say impact in Kinneret, it's the areas that we focus on, agri-food and sustainability, but also supporting a region. And the interesting thing on the part of the LPs and the investor in the fund is that for the first time, I think in Israel, we see agricultural communities, which usually invest in heavy equipment, in seeds for the next orchards and so on. They're now looking at investing into those kind of funds. And we have in our LPs a number of agricultural community who have decided that they want to invest in their future. If it's in terms of technologies that we will be bringing and supporting, and if it's in terms of creating high-paying jobs, high-tech jobs in their region, for their children, which are not that interested to go into agriculture. But if it's ag tech, then maybe it's appealing to them because it's part of their DNA, but it has also the tech element. So I think that COVID has been a catalyst for that, because it has accelerated all the processes, both in terms of investors being ready to invest in different type of assets, but also lots of entrepreneurs that moved from the big cities and now are still, when you're an entrepreneur, it's in your DNA, and they still want to be entrepreneurs and not work in big companies. So we need to create the support for them in those regions.
Thank you very much. Amin, I'm interested in knowing. I'm interested in knowing whether you're perceiving the same thing. Now, I don't know how often I'm sure you deal with investors often, actually, but in terms of how they're perceiving these early stage companies at their sometimes conceptual levels or MVP stages, are you noticing a shift in are there new types of investors coming to the party that before would have stuck to the typical real assets or listed equities, now opening up to these alternative forms of investment?
Broadly speaking, from an impact perspective, we at our portfolio do not focus on per se for profit, for impact. We're very broad in our scouting and recruiting. If that comes, perfect, because that supports the SDGs, and that's definitely a greater impact. If you look at the landscape in Qatar, there's a couple of players that they focus on impact investment, social enterprise, and they're bundled with some investment schemes, which falls out of our mandate per se. We had in the past few leads that they scaled, and they went through regional expansion. It's a smart goggle for visually impaired, and it had beautiful, amazing technology that went beyond what was then I would reckon the Google smart goggle. So they had a beautiful leap of faith, and they made it, and right now they're in production. So we have these one-offs that happen. There is another center that focuses on special needs and how inclusive you can come up with solutions, and there is incentive schemes also bundled with that. But from my career, this is my sweet spot and my weak area, because before I take my position, I started the social entrepreneurship program in Education City, where we looked at social gaps in the country and the national indicators, and how I ventured in creating an engine to fill in those gaps. So this is a sweet spot to me. I haven't immersed myself a lot in my new role, but I'm all for it.
Excellent. Thank you for that. And Ruchi, look, even if it's not related to impact investing, what specifically have you seen in the changes of perception of investors in general? You touched on this earlier. You said people are a lot more open to investing in startups and early stage companies. Who are these investors? Are these professional investors? Are these people who typically are these retail investors? Can you give us a bit more information on that?
Sure. And in terms of impact investing, like we are actively looking into that sector. In fact, like I was on a couple of panels on ESG investing as well. And like overall, like if you look at Europe, it's much more advanced as compared to the US. And we are looking at funds that actively look into the ESG circumstances. Apart from that, like in terms of the investors that I was talking about, it was mainly about family offices and like investors who were traditional investors into real estate and all, but nowadays they are looking at alternative asset classes and might invest into VC funds as well. And they're definitely making some angel investments into startups. So these are the kind of retail investors, as you would say. And apart from that, there's also like this new app called Clubhouse. So there's a lot of action happening on Clubhouse, especially in the Middle East. If you just go through like the number of rooms there, like there's a lot of rooms on startups and investments as well. So I think that's again an exciting thing in this region. In terms of ESG, this region still has to mature a bit, and but people have started to ask questions, especially from fund managers, about the metrics of ESG, and especially the government funds out here, the sovereign wealth funds and all, they are actively looking at into ESG. And in terms of like governance, there's a lot of focus that's been coming slowly on having more diversity on boards, having more women on boards. So that's a new change that we are seeing in this region at the moment.
Excellent. That's good to hear. Madhu, I've got a question for you around perception of markets. So you're more than welcome to jump in on that impact investing discussion as well. But another thing is your perception on markets as an entrepreneur. What's your process of spotting this underlying themes and understanding that it's going to be more than just a buzzword or a fad and capitalizing on that mega trend? I'd love to hear your perspective on that.
Sure. I think the mega trends usually are cycles, right? It's when you talk about fads are always like they come fast and they disappear fast, right? And cycles has its own times, right? And some people are able to kind of spot typically, right? If you look at investors, they make the money most of the money is made when you're able to kind of start a industry or start a cycle, right? Or companies are starting cycle and you're able to come in early. And then when you're aggregating, right? When you're aggregating also, you can make a lot of money because in a different context, it's the pendulum always swings to extremes. Both ends of the extreme, you need deeper pockets, right? But many times people don't realize that startups also require your ability to take the risk. And then when you're aggregating, you're aggregate enough, then you're able to create the law of average, but people don't look at it from that kind of perspective. So the pendulum swing is always a cycle, right? The pendulum always swings to extreme. So whoever is able to understand both the macro and able to capitalize on the micro trend, right? Those are the people who will really be the kind of big winners, right? And what I would call as extreme value, right? Everyone talks about value, but can you really create extreme value? That's what we look at. And because we are tapping into the kind of networks, level 4, level 5, right? It's always a kind of a closed group. And when you're bringing networks, some of the VC companies in US have used the word scouting, right? You scout for talent, right? You actually have a kind of you're seeding your network where they're actually spotting on your behalf and they actually nurture them to a certain extent. And then you, like how the early stage or seed kind of even it's the programs are incubated in a university or inside a corporate environment, corporate innovation. So you need to have a bit of both, right? And unfortunately or fortunately, right, every company, every investor is investing into every kind of a stage of the companies now. There is really no difference between early stage, seed stage, VC, PE. Everyone is doing everything. So it's very difficult to figure out who's doing what. There is no separation of kind of investment cycles per se. So given that, unless you have kind of partnerships with right investors, not only the investment structures like the PE, VC kind of structures, but if you don't have access to the family offices, it's very difficult to figure out. Ultimately, all the deals are done when the deals are presented to the kind of retail world. The cream has already been kind of taken away. Let's be honest, right? And so the trick is, as an investor, right? How do you make sure that you have a deep enough network, but wide enough network? Both are equally important. I think we are see all these kind of whether it be people consider this like kind of almost black swan event or a black swan event. When there is always this kind of a reboot, right? A reboot, the entire world has gone through a reboot. This is unusual times. It happens very rarely in history. So I think there will be some very, very significant companies which will come out of this reboot. I think one industry what I've been noticing is wealth tech, which has become coming of age globally. Not just from a valuation perspective, but value creation perspective and the momentum in terms of revenues itself, hundreds of millions of dollars. And the other piece, which is basic industries like agriculture, it's like, this was not out of choice, but I was advising a company, and then I found it interesting enough where I jumped in, and then I'm helping in the agriculture industry where they're focused on DSR, direct seed, for specifically rice, because rice is a very staple food in India. So they're bringing a lot of innovation to the table. And in that process, I end up exposed to the impact investment. I use the word compassionate capitalism, but impact investment, also I'm involved in terms of this. We have created Section 8 companies, as they call here. It's for benefit companies, equivalent to for benefit in US. You can create profits, but you can't take away the profits. You can't distribute the profits as dividends to the investors. You have to put it back into the system. So I'm involved in those two things as well. Entrepreneurial Foundation, which helps the entrepreneurs to understand and network. And then second piece is agriculture, which can bring in the CSR monies and the impact investors money to make sure that you subsidize the cost of innovation effectively.
Excellent. So that was, what was it called? Compassionate capitalism. All right. So that's
compassionate capitalism.
Nice. All right. So we're obviously coming towards the end of this roundtable, and I think the insights, well, when people watch this, they're gonna, the insights being delivered are invaluable. But I want to do one quick around the table discussion, and I think speaking to nearly around 60 founders a month, we sort of understand what their fears are. So let's talk to the fears of founders for a second. One of their major fears is presenting to you guys, investors. Okay. And so this is sort of my chance to ask you directly a very, very simple question from your end, because it matters on your own perspective and your own preferences. When you see a founder present and they have their typical pitch deck, of which I think you guys have seen a multitude before, what slide speaks to you most and is of most importance to you, and why? And if we could go around to each investor now and have that explained, I think that'll do a world of wonder for our founders watching this live stream. So starting with you, Ethy, when someone presents to you, which one strikes you and why?
So I think that usually I will, like Amin said, I will look at the team. But there's been, because we're dealing with early stage, you will see many times just one founder. So not really a team yet, just one founder with a very bright idea. So I can't say that there is just one slide that will be my go, no go. It's a combination of the idea, the vision. I think having a big vision is something that we are looking for. But in many cases, if I see a really good team, I will put less importance on the idea, because I know that, this is a team that can deliver, and the idea can be modeled a bit, can be adapted to the needs of the market. So I will keep my eyes on a really good team.
Excellent. So obviously with a team, you've got, you want to see a depth of experience and the ability to attract top talent as well, right? If top talent's there, then the idea is probably good. So Amin, what about you? When you have a presentation in front of you, what slide are you waiting for eagerly, and why?
Yeah, same for what Ethy mentioned. It's a distilling many slides that focus on, do we have a big vision here? Visionary people are, you can put them on the cloud or off the cloud. There should be some type of hallucination there, a brighter future. And that comes for me in the sparkle. The skills, definitely, if they lack skills, technical or soft skills, that is easily recognizable for us. Hard skills, when you don't have the needed human capital to understand and execute the needs, that's easily recognizable. Hire your weaknesses. In terms of personal skills, also you can see their ability to communicate, to work with their team members, to create an interesting energy and early stage culture, But what matters for me, besides those two most important parts, is the attitude of relentlessness, the attitude of the marathon. I'm not, as Angarus mentioned, we're not in sprints. you are definitely in a multitude of sprints in part of a long marathon, a marathon that usually Kenyans and Ethiopians wins, the 10,000 kilometers, right? And that type of thing, you need to see how they're exploring and expediting the market to always look at unique selling points and unfair advantages. And that attitude within speed of go-to-market and access or democratization of technology, it's hard to retain unique selling points, right? Because competition is 6 months away. So getting the attitude that I'm always at the forehead, trying to get something unique out there, that attitude is really important. And I think it is captured in many slides, and post slides is the one-on-one conversations.
Yeah. So obviously in those conversations, that's the social capital that you're or the human capital that you're understanding on a deeper level as well, obviously. Ruchi, what about you?
Yeah, I think like the team slide is most important, and we specifically look for founder market fit. So like there's a product market fit that's very much important, but also like the founder market fit. For example, I'll give you a short example about a portfolio company in which like we had a Stanford computer science graduate who was helping out the company, and it was a healthcare company. So like like you constantly have to interact with doctors, and doctors are very busy people, so they might make you wait in the waiting room for a couple of hours or more. So this particular Stanford computer science graduate was getting so impatient, and he wasn't willing to wait in the doctor's room for a couple of hours. So that shows like because like they are like they have a lot of work to do as well, but like in terms of like having that empathy especially for your customers, because the doctors would eventually be your customers, having that patience and be able to relate to them, I think that shows quite a lot of things, because everybody is busy, but like having that sort of element that might be missing in some people, then it's really harmful for the entire company. So we constantly look for founder market fit, and we also look for certain spikes in people, like the ability to hustle, the ability to actually have complementary skill sets when you have two founders. So like one might be like a really technical guy, but the other person has to be business savvy. And it's really important for the founders to be able to raise funds later on as well. So it's important that they have that ability to actually present themselves in a good way, because like especially in medical device companies, the companies go through multiple rounds of fundraising before even getting any revenue. So like it should be like up to the founders to have those skills that would actually complement each other and be able to fundraise at the same moment.
I like that term, so founder market fit. That's excellent. That's really good. And especially that what you've mentioned there around actually just not having only a business plan, but a funding plan is obviously very important to investors. They need to know that this is going to survive in the long run. Madhu, to finish this off today, let's talk about I'm sure the multiple investors that you spoke to in your early days, and I guess in those presentations when you had to really sell your idea, what worked, because you did it. So it'd be great to hear from you.
Sure. I'll tell you my own story as an entrepreneur. I never raised money. I was fortunate to have made money. What I look for is entrepreneurs who have the ability to use the money and make money, right? Because the key part is, like, say, your ability to raise money for funding versus your ability to raise money through sales. Both are equally important. So as an entrepreneur, fortunate that I did not get my first check. I thought I was the smartest kid in town, but fortunately, you had to go through the lessons of life, and then you, as an entrepreneur, became very successful. Even if you raise money, if you don't know how to make money, you have a lot of stories, like, as they say, right? Like there's endless stories where people raise billions of dollars, and then before you realize, billions are gone, right? It's to every entrepreneur I will use the word wealthy entrepreneur. Every wealthy entrepreneur will vouch. It's a lot of sweat, blood, and tears to create $1 million sale, $1 million profit, $1 million dividend, right? It's a 3M philosophy I talk about. Show me $1 million sales, show me $1 million profit, show me $1 million dividend. These are very, very hard. So what I look for in companies or in founders and teams is, do they have the ability to think big, but start small, right? Thinking big is very, very important, but you have to start small. Everything starts with an idea, and how do you create the idea into kind of an actionable item, and then a lot of things goes into creating that idea into kind of a reality. And then what I also look for is authenticity, right? Is it authenticity in terms of, are they passionately, truly involved in that cause, in the company, or they're just, obviously there is always the delta. The delta cannot be so big where they're just in it for making money, or they're just in it to raise the money. It's very, very key for me because every true successful, greatest entrepreneur, they always had the pulse of the customer, right from Steve Jobs to even the mavericks of today's world. They understand the behavior of the consumer. You need to understand the pulse of the consumer. Otherwise, there is no business. If there is no consumer, there is no business. Whether it can be as much a charity, right? So those are the three things very important for me. How do you think big? How do you start small? Authenticity, and then over a period of time, entrepreneurs learn, like I had to learn with a lot of hard work and practice, is you have to know how to communicate well, precisely, and concisely, right? Your idea. It's how do you capture the imagination, and how do you capture the attention of the audience in the room in a split of a second, right? So you have to learn to be a great showman or showwoman, as I would call, right? It's very, very important to grab and attention of the consumer, attention of the investor, attention of your team, because you have to tell a story. And the story is reality. When the story is real, then you don't need to sell a story, right? Story is authentic. That's what we look for.
I think that's a great point to end on, the untold deaths of good ideas because of ineffective communication. Guys, this has been an unbelievable panel session in terms of insights. I think it's been very genuine and authentic, and it's really good to see these real insights be diffused amongst the audience. So for those watching, as you can see, the framework is in place in this region to thrive. The investors are very open about what they're looking for and what they look for in terms of character, in terms of company, and obviously in terms of presentation. And I think that's been made very clear thanks to all of you. And I appreciate having you all on the panel today, and hopefully we speak again soon.
Thank you.
Thank you very much, Sidney.
Thank you.